All right, what's going on, YouTube? It's Andrew, the Frugal Crab, doing another video. We're just going to go ahead and cover a previous trade that we did recently, just kind of go over the ins and outs of exactly what happened. So, of course, guys, these videos are for educational purposes only. I am not a investor. I am not a licensed attorney. I'm just your regular old individual trying to teach you guys how to trade options and make a little bit of extra money on the side. So, of course, in this video, we're going to go over one of my most recent trades, which is going to be Dick's Sporting Goods. Again, if you guys want to know some trades that I'm going to make for the upcoming weeks or the next month or the next year, whatever it may be, I am going to have a Discord and a Patreon. And you guys would just have to join one of those channels. And of course, you'll be able to get some of those live trades as they are taking place, get some of the information that you need. And of course, guys, like I said, as always, this is something new videos, new channel that I'm starting out. Just want to share some of this information with you guys just so you guys can understand and know that there are other opportunities and other places to make a little bit extra money. So, of course, to help out the channel, if you could hit that like button and the subscribe button, I'd greatly appreciate it. Just let me know if these videos are helping or if there is something that you'd like for me to cover. And, of course, I will try to do that at some point in time. So let's go ahead and get started. So, like I said, in this recent video or recent trade, I did one on Dick's Sporting Goods. So, of course, for anybody that's not aware, Dick's Sporting Goods had a recent earnings call report. Everything sounded good. Everything looked positive compared to the previous earnings report where they had a significant drop. So, of course, it was a very lucrative trade. Now, whenever you guys are trading options, when it comes to earnings week, there's always going to be a significant increase in the amount of premiums that you guys can receive. So, of course, on this channel, all we do is sell covered calls and cash secured puts. That's all we do. We don't buy options. We only sell them. Again, as I've said before in previous videos and will continue to say in future videos, we're trying to increase our income. That's the most important thing. So we're not trying to spend $500 here, $1,000 there, $200 there. We're trying to increase our income. As I've said before, from working, being a manager in healthcare for over a decade now, the most important thing that you want to focus on is increasing your income. So like I said, Dick's Sporting Goods, they had a earnings report that came out recently. Like I said, they reported good earnings. So, of course, their stock skyrocketed. So, as you guys can see on my screen, right here, Dick's Sporting Goods was trading at 118, which in my opinion is fairly valued for this stock. But on that day, it shot up to about 132. I think it closed somewhere around 125, 26, something like that. And then, of course, it slowly trended back down. Okay. So you guys ask, well, how did you know to make a trade on Dick's Sporting Goods? Well, for one, it was reporting earnings. So I already knew that the premiums were going to be a little bit higher than normal. And when we are looking for stocks to trade options on, not only are they, stocks that we want to own, short-term or long-term, but they're also stocks that we believe are not planning on going bankrupt within the next week, next month, next year, whatever it may be. So, of course, these are your traditional, as most people refer to them as blue stock, blue chip. I think that's what they call them, blue chip. So those are your traditional, S&P 500 stocks that you can find: Walmart, Target, Amazon, Dick's Sporting Goods, all those good stocks to choose from. So, of course, on this day, you can see it was traded at 118. If we look at the month, you can see there's a little bit of a trend. Of course, it was down here at 102. Again, I wasn't researching Dick's Sporting Goods at that time, so there's no way I would have been able to make that purchase. But, of course, that big drop came from one earnings, which was right here in August. As you can see, their last earnings, where they were at 147 and had a big drop related to a lot of extra theft that was going on in stores. Now, I haven't been following Dick's Sporting Goods since COVID-19 first happened, or I should say the bug or whatever you want to call it. But I'm probably going to have to go back and edit that portion out. So if you guys see any interesting clips, that's what that's for. So anyway, so back when the bug was going on and being passed around, there was, a big increase in the price of what Dick's Sporting Goods was trading at. So right here in this chart, as you guys can see, only 3 years ago, Dick's Sporting Goods was trading at $26 an hour, very low. You could have made a lot of money if you believed in the company. As you can see, the very strong increase over the course of a year to two. And of course, they're heading a little bit higher, and they're stabilizing at this point in time. So like I said, when it came to this trade, if we go to trade DKS options, which is what we're going to look at real quick, you guys will see if we go to sell a call. And again, the strategy that I employ is I call it the double dip method. So, of course, you want to pick a point on a stock that you have no problem owning, which happens to be a good buying point. So at that point in time, 118, 120 was a good buying point. Okay, so let's just say we're going to use the 118 strike because that's where I was at. So purchase a number of shares at 118. So, of course, at that point in time, again, obviously this is at the end of the week, so there's no contracts to sell. But at 118, so you would have been able to, at that point in time, I'm not going to show this. I'm going to show next week just for number purposes. But if you purchase it at 118, as you can see, the current call for 118 is 450. I believe I had put in a covered call for somewhere around 125. I can't remember exactly, but I believe it was around 125. But let's just use 125 as a reference. So you bought it at 118, right? So you paid 118. You bought 100 shares. That comes to $11,800. You sell again, this is the double dip method. You sell a covered call on that same stock that you just purchased. So you sell it for 125. It's going for 110 right now. So that means you receive $109.97 in premium right then and there. But then you also turn around, go back to 118, and you sell yourself a cash secured put. So here, again, these numbers are a little bit different. They were a lot higher. As you can see, the significant changes because earnings weeks has already passed. So 60%, 62%, 60%. And of course, this is a change. But at one point in time, these were charging somewhere around $4, $5 per contract. So you can make a significant amount of money at that point in time. So what you end up doing on this situation, or what I did was bottom at 118, did a put for somewhere around 111, 110, something like that. So, of course, I collected the premium on that. And then, of course, collected the premium on the covered call as well. So when the news or the earnings came out for this stock, the stock shot all the way up to, I want to say it was like 132, and eventually I ended up selling it and buying my contract back around like 129 or 130, something like that. I can't remember exactly, right? But of course, whenever you're doing the double dip strategy, what happens is that obviously the best way to explain it to people, or the way that I explain it, is you have two sides of the coin. You have a heads and a tails, right? So if you purchase a stock like Dick's Sporting Goods at 118, and again, we're using this right up to earnings, right? So that means the premiums are going to be more expensive, but it could be any stock. It could be Disney, it could be Amazon, it could be anything. But if you think of a coin, there's a heads and a tails. If you purchase a covered call, and we're going to say 125, right? So if you purchase a covered call at the 125 strike point, and we're using December 1st, that means you collect premium on this side, but then you also purchase a cash secured put, and we're going to use 112. So you collect the premium. In this situation, it says $5 right here, right? So what ends up happening is that if the stock shoots up all the way, let's just say to 130 like it did on that day, your put is going to be worth pretty much nothing, and you can buy it back for pennies on the dollar, right? If it goes the opposite direction, so if it goes from 118 all the way down to 112, 111, 110, obviously if your option finishes in the money, then that means you guys would have to purchase 100 shares of this stock. But then that also means your covered call is going to be worth nothing. And again, you could purchase it back for pennies on the dollar. The key is not to be greedy, but to make sure to pick something that's likely not to happen on the put side, but also likely not to happen on the call side, right? So that basically guarantees that no matter what happens, you're going to win somewhere. Even if you only take a profit of, like, let's say you purchased at 118, but the stock finishes at 120, that's fine, because we are just concerned about income. You're collecting the income from the call, but you're also collecting the income from the put. If you decide to close out one, that means now you're only playing one side, which means you have an easier time of predicting what you need to do next, right? So like I said, in this situation, we ended up buying it for 118. Skyrocketed to like 130, 132, somewhere in there. We sold it for 129, but we also had a cash secured put and a covered call. So we ended up closing out both of those positions. And then once we closed out both of those positions, we just sold it at market value and collected the appreciation. So again, guys, if you want to see more videos or have me talk about my thought process and how I go about doing cash secured put, covered calls and things of that nature, please leave a comment below or shoot me a message. Hit that thumbs up button to let me know what you think. And again, guys, appreciate your time, and we will see you next time.